To most people, a $1 million Bitcoin sounds quite far-fetched. But remember, so did a $120,000 Bitcoin back in 2020, when Bitcoin was trading at just $12,000. Today, we're well into six figures, and $1 million is no longer a fantasy. It's entirely plausible. In this video, I'll show you how relatively small shifts in global capital and a shrinking Bitcoin supply can push the price to levels that most people can't yet fathom. Before we start, this isn't intended to be a price prediction. Unfortunately, I don't possess a crystal ball, nor the ability to see into the future. This is just a simple model based on high-level assumptions, forecast inflows, and approximate asset class sizes to help you visualize how Bitcoin's price can grow. It's not perfect, but it is useful, because once you understand how the price is actually set, Bitcoin's potential becomes a lot easier to grasp. Let's break it down. First, how is Bitcoin's price set? Have you ever thought about how that magical number, which represents Bitcoin's current value in dollars, is actually determined? Many people don't give much thought to how Bitcoin gets its price. This can lead to assumptions about the amount of capital that needs to enter the Bitcoin market in order to move the price up. For example, if you expect Bitcoin's price to double, then the amount of capital inflows into Bitcoin would need to double too, right? Fortunately for us, this is absolutely not the case. Let me explain. Bitcoin's price is set at the margin, meaning it's based on the most recent trades. For example, if someone buys a single Bitcoin on an exchange for $120,000, that becomes the new market price, even if 19.7 million other Bitcoin didn't move at all. This is not unique to the Bitcoin market. It is also true for stocks, gold, and even real estate. Your house is valued based on recent sales of similar homes in your area and not what you paid for it. But Bitcoin is different from property in a key aspect. It's extremely liquid and transparent. Everyone can see the current market price. A more relevant comparison for Bitcoin is the stock market. Let's say Amazon shares are trading at $226. That price is set by what buyers and sellers are agreeing on in real time. Not every Amazon share is being traded, but that one price is then applied to all outstanding shares, theoretically. I say theoretically because if everyone decided to sell their Amazon shares at $226 all at once, the price would collapse. So remember, Bitcoin's market price is based on what someone's willing to buy or sell one for right now, not what someone paid for it a week, a month, or a year ago. So how is Bitcoin's total market size determined? This brings us to another misunderstood aspect of the Bitcoin market, and that is market capitalization, commonly called market cap, or the total size of a market. In this chart here, you can see Bitcoin's market cap as compared to gold, silver, and the largest companies in the world. People often think that if Bitcoin's market cap increases by 1 trillion, that means $1 trillion has flowed into the market. But that's just not true. The market cap of any asset is calculated by multiplying the current market price by the circulating supply. Let's say Bitcoin is trading at $118,000 today, and the supply is 19.7 million coins. That gives us a market cap of around 2.3 trillion. Now, if the Bitcoin price doubles to 236,000, the market cap doubles too, to 4.6 trillion. But that doesn't mean that 2.3 trillion in new money entered the market. It just means that some recent trades occurred at higher prices, and that price is now applied to the entire supply of Bitcoin. So it only takes a small percentage of the supply to be bought at a higher price for the entire market cap to go up. And because most Bitcoin is illiquid, meaning it is either held long-term or off exchanges, it doesn't take much buying pressure to move the price significantly. This might lead you to another question. How can Bitcoin be traded 24/7 on hundreds of exchanges and yet the price is virtually the same everywhere? The answer is arbitrage. For example, if Bitcoin is cheaper on Coinbase than Binance, traders and bots will instantly buy on one and sell on the other. That keeps prices in sync across platforms. So even though the price is technically set on individual exchanges, it effectively becomes the global price because of instant arbitrage opportunities. What about trades that don't occur on exchanges? Will they affect the Bitcoin price? As you may already be aware, not all Bitcoin trades happen on public exchanges. Big players like institutions, corporations, or even governments often use OTC or over-the-counter services to buy and sell Bitcoin. OTC trades don't show up on the price charts right away. They're negotiated privately, usually at or near market price. But the key point is this: those Bitcoins still come from somewhere, usually the same supply that feeds the exchanges. So even if OTC buys don't move the price instantly, they reduce the available supply, and over time, that tightens the market and increases upward pressure. Let's take MicroStrategy as an example. If they want to buy 5,000 Bitcoin, doing it on a public exchange would spike the price and lead to significant slippage, where they end up paying more for each incremental Bitcoin as they chew through the available market orders. This would not only result in a higher average buy price for MicroStrategy, but it would cause the Bitcoin price to spike across all exchanges. So OTC lets them buy at a fixed price and not spike the market. But Bitcoin that they buy still exits the available supply. So whether it's publicly or privately traded, buying reduces supply. And when supply shrinks, prices rise faster as more money chases fewer Bitcoin. Now let's get to the fun part, exactly how Bitcoin could reach $1 million. Before we get into this, I ask if you are learning something that you didn't know before and you're enjoying my video, please like, subscribe, and share it with someone who would benefit from it. My channel is not supported by YouTube ad revenue, so I really appreciate all the support of my viewers. A macro-focused investment firm called UTXO Management recently published a forecast estimating that institutional flows into Bitcoin would total $120 billion in 2025 and another $300 billion in 2026. So far this year, around $60 billion has already flowed in. These flows include ETFs, pension funds, sovereign wealth funds, asset managers, corporate treasuries, and even governments. So what happens when that kind of money enters a market with a constrained supply? As of July 2025, there are around 2.4 million Bitcoin on exchanges. If another $360 billion flows into this limited pool over the next 18 months, Bitcoin's price could rise to around $245,000. But here's the kicker. If exchange supply drops by just 20%, which is consistent with recent trends, we're down to approximately 1.9 million available coins. And that same 360 billion of capital chasing fewer coins, that puts Bitcoin at around 275,000. Again, this isn't a price prediction. It's just a way of visualizing the impact of supply and demand on the price of Bitcoin. Of course, Bitcoin's price will not rise nice and evenly as per the numbers on this chart. It's just a way to show how money flowing in changes the price quite rapidly. And yes, I know that not all exchange coins are actively traded. Some are idle, some are custodied. So the real liquidity may be even tighter, making these numbers quite conservative. So while UTXO's inflow forecasts suggest a possible doubling of Bitcoin's price, they still don't have us near a $1 million Bitcoin. So let's look bigger. What if just 0.3% of existing global capital that currently sits in gold, bonds, equities, and real estate was to move into Bitcoin by the end of 2026? Let's model it. These four asset classes represent roughly $668 trillion combined, 0.3% of that is about 2 trillion. That's more than 5 times the UTXO forecast. Remember, Bitcoin is still a relatively small asset. So even a small reallocation from massive markets has an outsized impact. With a current exchange supply of 2.4 million Bitcoin, that 2 trillion in inflows would push the price to over $800,000. Now we are talking. But it still hasn't hit a million. So how does it get there? Again, let's have a look at what happens if the available supply shrinks by 20%. That same $2 trillion reallocation would push the Bitcoin dollar price up to just over $1 million. This is now the exponential zone, where price action exceeds the expectations of anyone who has not been paying close attention to Bitcoin supply and demand dynamics. This is the suddenly part of gradually, then suddenly. Now remember, this is just a model for the purposes of comparing with the UTXO inflows. It doesn't mean that you should expect this much capital to flow into Bitcoin over the next 18 months. Nobody knows how long it will take to happen. And yes, rising Bitcoin prices will likely cause more supply to enter the market, resulting in short to medium-term price drops. But so far, in 2024 and 2025, even with rising Bitcoin prices, exchange balances have continued to fall steadily. This suggests that Bitcoin holders aren't eager to sell and that more people and institutions are withdrawing their Bitcoin off exchanges and moving it into cold storage. So you can see that while price and market cap increased significantly in both the UTXO and the 0.3% global capital reallocation models, the actual inflows required to push these numbers up are much smaller. For example, you can see that in the more conservative UTXO forecast, the one where no supply reduction occurs, the current price and the market cap have more than doubled. However, it required only an additional $360 billion to move the market cap up by 2.4 trillion. In the second, more aggressive 0.3% capital reallocation and 20% supply reduction scenario, an additional $2 trillion in capital moves Bitcoin's market cap up by around $19 trillion to $21 trillion. So is a $1 million Bitcoin possible? Based on current trends, institutional interest, and simple supply-demand math, I think the answer is yes. The only thing we don't know is exactly when that will happen. It doesn't require a total collapse of fiat. It doesn't even require hyperinflation. All it takes is a relatively small shift in global capital into a constrained and declining Bitcoin supply. So the real question isn't if Bitcoin reaches 1 million, it's when. If this video helped you understand Bitcoin's price mechanics, hit like, subscribe, and share it with someone who doesn't yet see how Bitcoin's price could grow gradually, then suddenly. Thanks for watching and see you next time.